Hey everyone, this is Steve Kik, your host of the MMLA Connect Podcast. Today, we're doing something a little bit different. I'm excited to have Shaun Anders, real estate agent with Berkshire Hathaway here. Shaun, how's it going?
It's going great. Thank you so much for having me.
I'm excited to have you in person. We haven't done it this way yet. It's always been, remote. So the first live version of the podcast, I'm excited to have you. Also, our first real estate agent. I don't think people really understand what that means. We're going to get a little bit into that in a bit here, but the fact that you joined the MMLA and you've put that foot forward that you really want to get to know the lending side of things a little bit better and kind of, network that way. I think that's a huge opportunity for you. So we're really excited from the MMLA standpoint to have you on board.
Great. Thank you. Yeah, I'm excited to be part of it.
Yeah, absolutely. So Shaun, let's get into your career. Tell us about your humble beginnings and, how it all started and where you got to where you are now.
Sure. So I'll try to keep it brief. I don't want to get too boring and bogged down in the details. So I've always been around real estate. So my mother's been doing it for over 35 years, coming up on 40. My brother's been doing it for 25 plus years, all in West Michigan here. So I've grown up in and around real estate. It's always been part of my blood. Multiple uncles across the country that also do it in some other markets. It's just kind of in our family.
True family affair.
If there was such a thing, yes, true family affair. So it's always been in my blood. Went off to school, tried to do anything but real estate. I was brought out to New York for certain reasons in the middle of college, and we don't need to get into that.
Hey, we can go as deep as you want.
To go there. So I was brought out for that, and didn't enjoy that world, but I loved New York, and New York got its hooks in me. Came back, finished up school, and my then fiance and then soon to be wife decided we wanted to move back out to New York and try it in a different light and, get into, the corporate world. Tried a couple of direct sales jobs and then, just kind of chatting with my parents one night and my dad's like, hey, why don't you get into real estate out there? See what you can learn, do something different. And then, when you're ready, move back and you can, come do this with your brother and your mom. And I said, okay, sounds great. So got into real estate in 2007 back there. So I guess it's 18 years now. And I started out as an assistant to a top producer at my firm out there, which is Douglas Elliman. And it's one of the premier firms in New York and across the country, all in luxury markets primarily, but they're starting to expand a bit. Anyway, so I started out as an assistant for a couple of years, was ready to kind of do my own thing, and joined a top 10 team out there. And that kind of polished me and turned me into more of a businessman and thinking of it as a business instead of just a job. So I really started to take on networking, and networking was kind of my secret sauce to building my business out in New York, because I didn't know a lot of people. I'm from here, and networking and business networking at that is very important. So I started business networking, and that kind of took my business to the next level, created my own team and ran my own team for the next, I guess that would have been maybe 10, 12 years. And then COVID happened, and, my wife and I, we had a couple of kids at that point, didn't want to live in New York and raise them there. And, the wind brought us back to New York or back to Michigan. And we settled here in East Grand Rapids. We wanted that walkability that it provides with great schools and just the beautiful historic and unique homes. And then I, started working full time here with Team Anders at Berkshire Hathaway and my mom and my brother. And we've got 8 agents on our team. And, we do over 200 transactions a year. So we're one of the top teams in all of West Michigan. And it's been going great. We've had a great time working with family and working with new clients. And doing real estate in Michigan is very different than New York. And it's a different animal. So I had to kind of relearn more or less the logistics of it, behind the scenes, the stuff that the buyers and sellers don't necessarily see. So I had to learn that, but came in as a broker, and I'm an associate broker in New York, and I'm an associate broker here in Michigan because somebody on the team has to be. My dad is, but at some point I'll have to take the reins and do that myself. But yeah, so I've been doing it here for a little over 4 years. Love it, and it's a great time getting to know people and know the markets and understands the different neighborhoods and how things are done. So really love it.
So let's kind of go back a little bit here. How would you say working with the top real estate teams and kind of being that assistant, how crucial was that to you learning the full process before you became a real estate agent? Do you think that was super impactful in your career?
Absolutely. I think when people get into real estate and they see all these shows on TV, and I know a lot of those players out in New York, they think it's easy. They think you're going to just run into somebody on the side of the street. You're going to sell them a $10 million property and there you go, you're off and running. Well, that's not the case. And you have to walk before you run in real estate. You've got to learn the hard way. I started out doing a ton of cold calling. I did a lot of direct mailing campaigning. I would follow up with more cold calls. I would do tons of open houses. I was just out there grinding and working and building up my sphere, building up my client base. And learning from the top agents is, in my opinion, the only way to create a sustainable business in real estate to where it can be your full-time job. If you go at it from a different angle and you don't get that proper coaching, that proper mentorship, the proper classes and things that you need to take, even after you're done getting your license, there's still more learning that you need to take to learn how to do real estate properly. There's a lot of companies that don't provide that, especially here in West Michigan. Berkshire Hathaway is amazing. We have fantastic coaching and training at Berkshire Hathaway, and not a lot of companies have that. So buyer beware. If your agent's not with Berkshire Hathaway, they may or may not know some things. So that's the one thing I will definitely toot Berkshire Hathaway's horn on. They do a great job with that. But I think it's very important to have somebody else kind of bringing you up through the business. And I think it's very important to have that and be on a big team first.
Having that mentorship, but also the mentorship through, top producing coaches, it takes you to another level, right? You learn the systems that get them to that place so that you can implement that in your business, correct?
100%. I mean, there's countless, business coaches out there, real estate coaches. I've always been more of a self-starter. So I haven't dove too much into those guys, but I know what they do. And a lot of that stuff I just kind of naturally did. A lot of the Tom Ferry stuff, I'm just like, how he follows up with people and creates his CRMs and all that. I'm like, I kind of already do that. So I don't really need to go and pay this guy $1,000 for him to tell me what I already do. But I think you can always learn, you can always grow. And that's why I'm always out there trying to learn something new and trying to network with new people and all of that.
Always be learning. That's something that I always tout, something I pride myself in is, the more I learn, the less I know, right? Mm-hmm. So I always love going to, anything that I can get my hands on, whether it be real estate related, mortgage related, or even, personal development, things like that, right? We always need to keep getting better. It helps us in our job. Yeah, definitely. Let's talk a little bit about family, right? It's a family affair, as we talked about. Team Anders, they've been around for a long time. You've obviously been in the business for a long time, but what is it like being back home and being on a team with your family? It's unique. There's certain dynamics to working with family, and overall it's the best. I love it. I get to spend time with my brother, with whom most people in West Michigan know. He's a very gregarious person, big personality. He walks into a room, you feel him and hear him before you see him. But Tim is the best. I love working with him. I've learned so much from him in the last 4 years. And just growing up around my mother, watching her treat people the way that they need to be treated as clients, that they will become forever clients, and you're not doing a turn and burn where you're doing one deal and you'll never see or hear from them again. She is 99.9% referral and repeat and referral business. People like her don't come around very often. She is a special human being that is willing to do whatever it takes to make the deal happen. We hate to talk about commissions. That's a hot button these days, but she will take her commission and cut it where it needs to be cut to make the deal happen. I mean, she'll do whatever it takes to make her clients happy. Learning from them has been great. Being around them a lot, seeing them a lot is great. Getting to know my niece better has been amazing. Getting, my children, Wyatt and Elin, getting them to be around family has been such a godsend and such a blessing to have them see their grandparents regularly and be babysat by their grandparents regularly. Sure, go out and enjoy it. I'm sure that's nice, right?
Free babysitting is not that bad. So that's been a nice benefit being home. But it's been amazing. I love it. There are no negatives, in my opinion, to being around family, learning from the best in the business, doing things the right way, treating clients the way they need to be treated. And I think watching my brother and my mom do that is fantastic.
Yeah. And I can attest to it. I've been able to do a handful of transactions with them, and it's always been great. The service and the communication and everything, it's always been really good. So we're excited to have you in West Michigan doing the same thing.
Thanks, bud.
Yeah,
that's great.
Looking forward to it. So let's get to the elephant in the room, as I should say. And that's, why the hell did you join the MMLA? Well, so let's break this down here. Shaun is the first real estate agent that has become a member of the MMLA since I've been involved, that I know of. So, this instantly puts you in the top 0.01% of real estate agents in Michigan. by joining the MMLA. And I think it's a huge opportunity for you to network, get to know more people. You're going to have deals at every institution, at every bank, every, independent mortgage bank. You're going to be talking to these loan officers. I think it's a great idea that you get to know some of these people, as well as all the learning opportunities that we have on the mortgage lending side of things. You're going to meet a lot of vendors, but what's really going to set you apart is that you are going to be able to continue to learn and figure out some of these real estate, some of the stuff that's going on in the lending world, so that you can better communicate that with your clients. That's some of the things I see. But tell me why you joined the MMLA.
Yeah, I mean, a good friend of mine invited me to do it, Steve. And I think you got me to think about it because, as mentioned in New York, my secret sauce to building a business was networking. It's number one. I love meeting people. I love talking to anybody. I love talking real estate. I love talking football. I love talking anything. Let's just meet. Let's build a relationship.
I like talking too, in case anyone didn't know.
So to me, I mean, you kind of already touched on it. Networking was number one for me. And what I mean by that is getting to know more people, getting more people to know me, understand who I am. That way, when they see me on a deal, they know who they're getting. They know that they're not getting, Tim's long lost brother that came home from New York that is flashy and all this crap, that preconceived notions. And they actually get to know a nice, relaxed, understanding Midwestern guy that happened to live in New York for all these years. So yeah. I think it's important just to know people, so that way when something arises, if it's a problem or whatever it is, we can squash it. We can hop on a phone call like, hey, Shaun, it was good to see you last week. By the way, this is happening with the loan. What are we going to do about it? Okay, yeah, let's figure it out. Whereas if they don't know me, they could have some sort of preconceived notions, or it could be some like hard ass that might not know what he's doing, or who knows what it is. Getting to know more people, getting to understand the mortgage industry, I think is also something very important too, because I feel in New York a lot of the back end stuff, the contractual stuff, the lending stuff is very surface level knowledge out in New York, and you can get away with it out there. Because you do the deal, you hand it off, you let somebody else do it. We have attorneys to do contracts out there. So I also wanted to join to become an expert in the lending world too. I think to learn a little bit more about it. One thing I wanted to talk to you in a bit about is MSHDA. No clue what that is.
Yeah.
And I didn't realize it even existed until they started talking about raising the limits on that. I'm like, well, that's a game changer. If that's about to go through, that's insane. I mean, because the majority of my clients are well above that level, especially the current level. I don't think I've ever sold anything that low, 225 or something, right?
224.5 is what it's been since, I think, like 2017. It's been that way.
Yeah.
It hasn't changed.
It's about time it's changed, because market prices and values have gone through the roofs.
And it's going up over 500.
Yeah. And well, then that opens it up to,
a lot more people. There are income limits that are involved. So that's going to cap you in certain situations, debt to income ratios, limits as well.
Is there location limitations there?
Not necessarily. No.
Okay. So you could do it in a luxury market, you could still buy there with a MSHDA product.
Well, it's going to, as long as the purchase price is under that 5, it's going to be 5 and some change. I don't know the exact number. So I mean, we'll get into the luxury market thing, I think, in a minute here. But I mean, there's opportunities, I think, everywhere to learn. I looked up the statistics, and I think it said somewhere between 75 and 85% of all real estate transactions involve some sort of lending, right? That's a pretty hefty portion of the deals that you're doing with. And to me, it seems like a no-brainer that a real estate agent would want to know at least a surface level idea of, okay, this is how the loans work, or this is how a MSHDA loan works, or whatever, whatever the case may be, or a jumbo loan, right? There's certain requirements with jumbo loans when you're in that luxury market, right? Correct. So the more knowledge you have that you can pass along to your clients without having to, we're lenders and we're experts in lending for a reason, right? So I always try to let you handle the real estate questions as much as you can, or as much as I can deflect and give that back to the agent. But you also want to know some things about it, and be able to talk at a somewhat high level to your clients. So it's a huge step for you to be joining the MMLA, and we're looking forward to having you.
Awesome. Yeah. Glad to be here.
So we were discussing earlier, before we started recording, some things that you see or noticing going on in the real estate market, or some things that maybe you are looking to change up. Can you talk to me about what we were discussing?
Yeah. So, and this goes back again, I hate to continue to go back to New York City. So in New York, it's kind of standard protocol for the listing agent to be present at showings. And, I'm not looking to shake things up too much. And I've talked to my colleagues about this at great length, but to me, it would be a greater level of service that we provide to our sellers if we were there as the expert on the home to give it that extra salesmanship. And, you've got to kind of navigate that carefully with the buyer's agent and with the buyer. And a lot of buyer's agents, they want to be the belle of the ball and the king of the castle, and they want to be there to be the expert, and they don't want anybody else messing with that. But I think if it's pitched in the proper light, hey, I'm glad you're bringing your buyer here. The owner prefers that I'm going to be here because I can point out certain things that you may or may not know. It's not going to be on your MLS sheet. Allow me to be there to help sell the home to get this done for you and for your client. And to me, I think that is so important. And not that every listing needs that. Not, certainly I think some of the lower end stuff, the house is the house. It is what it is. Here's your bedroom, bathroom, kitchen, all that. It really, to me, matters when it comes up to the luxury level, which in our area, the luxury level is the top 10% of the market based on value. And that barrier starts because I started running my own data here because I realized that nobody in West Michigan does data. So I do my own. I'm a data guy. I love numbers. That number, the entry barrier to that is $1.1 million. So it's the top 10% of the market. Last year, there were 212 homes sold in that, and that's up 40 homes from the year prior. So bigger, better homes are being sold at the luxury market. But
pay attention. Pay attention.
Money's moving, but also property values are increasing too. So there's that. Yeah. But I think those homes deserve more. They deserve more service. They deserve more from the agent. And I think agents need to do their best to be there to assist that home in any way possible to get it sold for their seller and for their client. So that's one thing that I would love to see not changed. I think it's something that should
it's
start
a big opportunity.
It's an opportunity, but I think it should be a little bit more customary for our market here.
Yeah. You bring up several great points about that, but it's okay to be a little bit different, right? And to introduce new ideas. I mean, I know people were like, there's loan officers that still don't understand why I'm connected with the MMLA. Why would I want to go hang out with a bunch of other lenders, But at the end of the day, as you had talked about earlier, you're getting to know people on the other side of the deal, or like, hey, sometimes we're competitors, but it's a lot harder for someone to talk trash about you if they know you and they know that you're a good person. Yep. I think with what you're bringing to the space, it's so important because real estate agents' backs are kind of up against the wall right now with the NAR settlement and everything that went down and is still kind of going down, and buyers being like, well, I can just go online, or sellers being like, I can list this online. You're really at a point where real estate agents need to prove their worth. And I see that as a huge opportunity, especially if you're a luxury listing agent, right? Mm-hmm. That you're taking your clients by the hand and you're saying, hey, I'm going to walk everyone through this house. I'm going to make sure they know all the details, and we're going to handle this transaction for you. That's huge.
I'm going to make sure they know why you bought this house. Yeah. And I'm going to make them feel the same way.
Or what you did to make it better, right?
Exactly.
If you did
they
renovations.
Don't know about specific improvements unless you've gone through and listed it. I mean, I have a lot of my sellers do that anyways. We always have update sheets and things like that. But a sheet is one thing. A human body there creating a connection to that is another thing. When you've got somebody that can eloquently talk about the specific kind of quartz that is laid down that was imported from Italy, and it took 10 weeks and 78 guys to bring this huge slab here, and you can pull up a photo on your phone. I mean, you can really get as deep and as crazy as you want about this. But I think in terms of painting the picture and ultimately getting the highest price you possibly can for your client, that's the goal. And I think this is a huge piece to that. Yeah. It's missing in West Michigan.
Yeah. I love that. I'm looking forward to seeing more agents, make that a regular thing.
I would love to see it too.
Yeah,
I would love to see it because I'll say it, even as a buyer's agent, I will research the property. I'll know as much as I possibly can about it. You walk in as a buyer's agent pretty blind about a property, and you're hoping to point out certain things, but you don't know everything about the property, and not every seller's agent would either, but they will know more than you will. Going in blind after your fifth showing of the day, you're not going to remember, which house is which. So I think it's really, it's a really nice thing and great additional service that I would love to provide to any luxury clients.
Yeah. Is there anything else that's going on in the real estate industry that you want to talk about today?
Yeah. I mean, I did want to talk about at least the MSHA thing for sure with you. I mean, in terms of the market itself, it's pretty much a little bit more of the same. We've seen a really, really tight market, very few properties on the market. And, I'll touch on a couple markets here. EGR is 23 currently on the market. Healthy market would like to see 50 or 60 homes on the market.
Yeah.
In Forest Hills, 53 current actively on the market, 34 are pending. But we want to see that number around 200. Rockford, 47 actives, Caledonia, 47 actives. Kent County overall, we have 595 active and 605 pending. That number, we would love to see around 3,000. That's a nice, healthy market between 2,750 and 3,000. A healthy market will have that amount of inventory on the market, and we're just not there. And obviously there's many reasons for that. We can dive into that. That could get really a long, lengthy conversation I've had a trillion times over the last 4 years. Yeah. It's important to know that that's still happening. As a seller, you're still very much in the driver's seat. That doesn't mean you can put any price tag you want on your property, because it will sit there. Definitely not. It has to be within reason. Yeah. And the home also has to be, in relatively good shape. It can't have any hair on it, as I like to say. The home needs to be in good condition. It needs to have a nice layout. It has to be in a good location. It has to have good light. All those different factors all still play into how quickly it's going to sell and what it's going to sell for. But even the oddest of homes are still selling right now. They're not getting the prices they could. There are still records being set and things being achieved. I put a beautiful modern home on in East Grand Rapids on Monday, and we had 14 showings Monday, Tuesday, Wednesday, and we have a full price offer and went into contract last night. Things are still happening for the right property, but buyers are still price sensitive because of interest rates have spiked up over the last year and a half. But I think, you still have to have a price within reason. But if it's within reason, within 10% of the matrix of the true property value, it's going to sell. And it's going to sell quickly for a great price.
Yeah. What do you see are the biggest barriers to entry for inventory? Like why, what is our biggest problem that you see with that lack of inventory, and how can we fix it? Or can we?
Yeah. I mean, it's a slow process. So obviously there's building homes, builders can't build them quick enough. We're at a shortage of 35,000 homes over the next 8 years. And that's based on the numbers of people that are currently moving into the area for jobs.
That's for West Michigan, right?
West Michigan, yeah. Correct. So that's the overall West Michigan market as a whole. Very big shortage. It used to be around 50,000 was the number maybe 4 or 5 years ago. So it's subsided, but it's still, we're at such a deficit based upon the number of people that are moving. I would say the number one factor is just affordability in general. You've had, market values have gone up so much in the last 4 years. And then anybody that owned a home in the last 5 or 6 years refinanced out of whatever mortgage they had in 2020, 2021, 22. Everybody refinanced out, and they're all at 3%, 2.75%, 3.5%.
It's a problem.
Just ridiculously low numbers that are just unsustainable. So when you're talking about the person that's in that home, and even if they're busting at the seams with 4 kids and 3 bedrooms and 1 bath, they're going to make it work because they spent $350,000, $400,000 on this house. They have a 3% interest rate to afford a home that they want to buy that can fit their family in the same location where they're at. They're probably going to have to spend twice as much, $700,000, $800,000, and their mortgage is going to be twice as costly. So not only does the home cost twice as much, your mortgage borrowing money costs twice as much. So people are just making it work, which is why I think we're also seeing a pretty big uptick in remodeling and people adding on to their homes. Certainly a lot in the entry level homes in East. I see a lot of people just adding on like a huge addition to the back, and they're getting 2 or 3 more bedrooms, and they're spending a couple $100,000 to do that. But that's still cheaper than trying to move and trying to find something else and timing it out and all of that. So there's just this gridlock of new inventory and people not moving.
Yeah. I mean, it's tough because I was reading an article about this, and someone had pointed the finger to millennials and said millennials were the biggest first-time home buyers over the last 10 years or whatever, right? And I think it was like maybe over 30% of the market, right? But those first-time home buyers have such low interest rates that they're not moving up to that second home as you discussed, right? Because they're locked in at that low interest rate, and it doesn't make sense for them to go. So it's going to be an interesting game. That inventory it's turning over so slowly. It's those people who have to absolutely move, right? There are renovation loans that exist for people to make the house bigger. But ultimately, in our case, that's a refinance. You can tap into a home equity loan in some cases, depending on how much equity you have. But yeah, it's definitely going to be interesting too, because interest rates, we don't really know where they're going to go. I've never seen so much differing views on where interest rates are. I mean, and rightfully so.
Yeah. What's your thought?
The volatility.
Give us Steve's take.
So, I was a little bit more idealistic and optimistic, I would say, about rates coming down at some point. I think we're going to be probably in the mid 6s to the mid 7s over the next year. That's my guess. I think that's sort of the conservative view. Inflation is starting to go up, and inflation has a direct correlation to mortgage interest rates. The 10-year treasury is definitely something that you need to keep your eye on. As that moves, so does mortgage interest rates. But when inflation goes up, mortgage interest rates tend to go up. So the inflation meter is rising right now. Nobody really knows where things are going to end up. Things are being cut and then not cut. So there's a lot of uncertainty. The CFPB, I don't know if you pay attention to that, but that's the Consumer Financial Protection Bureau, which is basically the main regulatory governing body, if you will, for the mortgage industry. They basically cut and slash that entire thing. Lots of changes there. Should be a lot of deregulation happening, which can be a good thing. Hopefully it makes lending less expensive for lending institutions and companies to do that, because that is also an issue, is the cost of lending mortgages and doing loans is getting so high. But we really need those interest rates to come down if we can. But the problem is if we're artificially bringing them down, at what cost is it? Because I know that when we kept the interest rates super low for an extended period of time, at what cost, right? Like what cost was that to the American public or to the home buyers of now, right? And I think we're kind of looking back and saying, man, we had a great run there, but how did rates stay so low for so long, right? And the new norm is that I think we're in that 6%, 6.5%, 7% range, as that's kind of where the historic interest rates have fallen anyway. But it does, when home prices are 5 times higher than what they were ever before, it's that affordability
and income's
issue.
Not keeping up.
Right.
That's the thing. Prices have gone up so much, interest rates have gone up so much, but incomes have not kept up with that. So that's part of the problem as well. We need to see incomes go up as well as inflation, but it's just not happening because costs are so high for everything.
Yeah.
It's like this terrible perfect storm, if you will.
Sure.
To create havoc, but we'll get out of it. We'll figure it out.
I think
there's ways to navigate it.
Right now, the people who've made it through, at least the people who are in it, there's always new people getting into our industries, surprisingly at times, right? I mean, anytime I hear someone getting into lending or the real estate business, I think to myself, really?
Interesting time.
There's always a rookie of the year or someone who comes in and changes the game too. And you always try to learn things from them too. And you're like, dang, they came in first year and they're, so there's always new ways to go about getting business. And we always want to keep learning from that too. So
absolutely.
Well, you had mentioned you wanted to talk a little bit about MSHDA, so we might as well touch on that.
Yeah.
So MSHDA is it's a state agency that offers help with financing for homes. So if we can do a MSHDA down payment assistance loan, or DPA for short, they can, in the normal case, they're giving up to $10,000 towards down payment and closing costs. Right now, the max purchase price is $224,500, but on May 1st, it bumps up. They have a sliding scale based on, average sales prices and all that kind of stuff. And it's going to be over $500. So it's a huge change. It's going to open up a lot of more doors for the MSHDA program and for people to utilize that. They also have a pilot program going on right now for first generation home buyers, where you can get a $20,000 down payment assistance versus $10,000. So if you're a first generation home buyer, please reach out to someone and get in touch about the MSHDA down payment assistance program. I think they're doing $8 million with that program. So it's, first come, first serve.
Wow.
But yeah, and they also have some rate relief programs going on right now where the interest rate is intentionally bought down for the buyer to keep it low. There's income caps on that. You can't be over 80% of the area median income for that loan. So that does, limit somewhat the qualifications for that loan, but interest rates are, in the 5s and 4s with that program too.
That's
so
fantastic.
Yeah, it's, there are some options out there that lenders are starting to be able to put out that are getting people into houses that normally wouldn't be able to get into homes. So,
and that should help. That should alleviate a little bit of the pressure at the entry level of the market, which is needed.
That down payment assistance will be crucial with that higher loan amount. That 224.5 was holding, at least in West Michigan, when your average sales prices, it was 363. I think a few years ago. I don't know what it's at now. Is that about right?
Yeah. I think overall, when I ran my numbers, that's where it was.
Right. So if you're starting, median prices right there, and 224.5 is your max on Mishta, it was limiting a lot of people.
I don't even know what that gets you. Like a rundown home in a certain area that you probably don't want to live, or somewhere way out in the middle of nowhere where you probably don't want to live either, so it's like. Definitely,
the affordability has been an issue. So I'm excited to see that come into play. And there's trainings too that are coming up. I know I'm doing a training on Mishta, but I think we're going to be doing some with the MMLA, and it would be good for realtors to have a training on Mishta. I feel like a lot of them are just, they don't understand it, right? And I think they're quick to deny an offer because it has Mishta on it. Well, I wouldn't say seller always is the one making that decision, but it's maybe not presented in as good a light. When you compare a Mishta loan with conventional FHA, RD, VA, you can actually use it with pretty much every product.
Are there any additional hurdles or hoops to jump through for the Mishta person? Like, is there an additional inspection or anything like that?
It's all based on what type of financing you have. So if it's a conventional loan, it's going to be a conventional appraisal, right? So, and we're going to underwrite based off of conventional guidelines. So the only caveats would be is that you do have those income limits. It is household incomes. All adult members of the household have to apply jointly. So there are certain things that we have to follow in those situations. Yeah. So let's move on here and talk a little bit about the real Shaun Anders and what you like to do outside of the real estate office, or when you don't have your realtor hat on, which I know we kind of wear that all the time. But tell us about your family, what you do, when you're not always being a realtor.
Yeah, I mean, the real Shaun Anders is pretty boring, let's be honest. But no, I would say, when I'm out coaching my kids in some sports, basketball, football, lots of golf. The kids really took up skiing this year. So I've got a third grader boy and a second grade girl, and my beautiful wife, Amanda. So like, we're always running around chasing them, doing whatever activity they're in, doing whatever we can to just keep them happy and keep them growing and all that jazz. We try to be involved at the school as much as possible. Amanda's really gotten involved there. But, when not with my real estate hat on, which it's always on, by the way. So if you're here and you need to sell your home,
that's why I said that
hat
right?
is always on.
Yeah.
No, but I would say, we're out taking a family trip somewhere. We love exploring our country, our state, our world. We always try to get out of the country a couple of times a year if we can. Try to make our kids as worldly and as wide thinking as possible.
I love that.
Growing in West Michigan, it can get very small, very bubbly, very quick. So we want to ensure that they understand they have a very good life, and they've got a lot of modern conveniences that 95% of the world does not have. Probably 99% of the world. So we're always traveling, getting around, and just enjoying life with friends and family, and experiencing other cultures.
Variety is the spice of life, right? And seeing that diversity and being out there, it gets you a worldview that, not everyone has. So I love that you're doing that.
100%. Yep. We've got to.
All right. Well, we're almost at that point here where we got to wrap things up, Shaun. But for this podcast, when I end it, I always ask my guests to leave our listeners with one positive spin on the real estate or lending industry. So Shaun, give us your positive take on 2025 and beyond.
So I think 2025 is going to be a little bit of the same of 2024, which was a little slow and sluggish. But I think we're going to be settling into more of a new norm. I think we're going to see more transactions. We're going to see more buyers that have come off the sideline that are more comfortable with the current market conditions, with interest rates. And we're going to see more people moving. We're going to see a little bit more inventory come on. It's probably going to get snatched up right away again. But we're going to see more movement in general, which is just good for the market. It's healthier for our town. It's healthier for, just the market in general to see more things happening. And I think we're just going to get a little bit more comfortable with what's going to happen with, a new administration that everybody's trying to navigate to in the government. Sure. And I think the dust will settle with a lot of that stuff, because right now there's a lot of change going on. And the first first 45 days here has been very frenetic for them. They've done a lot of things, but I think the dust will settle on a lot of that stuff here in the next couple of months. And once the dust settles, I see the floodgates just opening wide up with, look out May, June, July. It's going to be a really, really crazy, frenetic, busy summer in the market. So hold on to your hats, hold on to your seats. It's going to be a good year. So
I love that. And I think the takeaway from that is be ready, right? Reach out to your realtor or your loan officer and have a plan coming up, especially if you're waiting till the spring, because it is going to be, kind of like the wild, wild west again, isn't it?
Yeah.
The inventory is just not there. So
might be good to start looking now with less competition.
Start those conversations early. Yeah. It never hurts to get the ball rolling when you're thinking about that stuff. And you never know, you might run into something that you want to buy. You didn't think you were ready for it, but it pops up. And right now, with the inventory being as low, you want to be as ready as you can to pounce on things.
Absolutely.
So, all right. Well, I'm going to wrap things up. Shaun, thank you so much for sharing your time, talent, and energy today. It's been great. We appreciate you joining the MMLA. It's a huge step. We look forward to what that's going to do for your career. I'm sure you didn't need it, but you're going to be super successful, and hopefully MMLA is going to continue to be a part of that. Thank you for listening to the MMLA Connect podcast. This is Steve Kik signing off.